Good evening. In today's session, let's discuss regarding agricultural credit and marketing in India, of course, and what are the issues and initiatives associated with this. With respect to this, in the year 2019, RBI has constituted a working group. Working group has observed many things with respect to the credit to agriculture, and it has recommended so many things. What are all the we need to understand? So here, if you look at one thing very clearly, agriculture is the mainstay of Indian economy. We know that. But in order to make our agriculture successful, farmers need money. But where is the money? Most of the farmers are either small farmers or marginal farmers. Unfortunately, they lack finances. But in order to support them, you have to provide finances for their agricultural activities. But who will provide? This is the big question starting from the beginning. Of course, now the institutions have come into the picture. They are providing agriculture loans also. But this is not happening 100% again. But let's try to understand what exactly happened in the beginning. In the beginning, though we have institutions, like institution means government institutions or any private institution that provide loan to the farmers. Here, in this context, when I am saying institution, this is nothing but a bank. So banks should provide loans to the people, and that loans also include agriculture loans. But in the beginning, a larger number of farmers unable to get the loans from the banks because of the various reasons, and the procedures are really cumbersome. That is the reason why the banks denied the agriculture loan to the large number of farmers, and farmers also reluctant to go to the bank in order to face these cumbersome procedures. That is the reason why in the beginning, many of the people, many of the farmers have depended on the money lenders. Money lender is a local person. He may be your neighbor or living somewhere in the village, and that money lender will lend money on the interest, and they will lend money for interest. But when it comes to the interest rate charged by the money lender compared to the banks, money lender charges very high. But the procedures are so simple. That is the reason why farmers, they bent towards the money lenders and they got the loans. So once they take the loans, they will invest that money in the agriculture. So once they will get the crop, once they get the profit, they will pay back the so-called the principal amount along with the interest. But what happens if there is a crop failure? So this is a big problem. So this is a big problem. During the time, the merciless money lenders, they used to snatch the agriculture land, their houses and other property from the poor farmers. And these poor farmers, uneducated farmers, innocent farmers, they could not do anything, and many farmers have committed suicide along with the families. Very unfortunate things have happened. Even now also they are happening, but the number has come down because the institutional loan has been increased now. So what should be done with respect to providing credit, meaning loan to the agriculture? So that is the basic concept that we are going to discuss now. Here, kindly remember, we are going to come across with the finance institutions and also non-institutional finance. When I say institutions, they are established by procedures, like banks or private banks. They lend money, they give the credit. Clear? But when it comes to non-institutional, these are unauthorized, like money lenders. Clear? They are unauthorized, they are not registered, but still they are carrying certain business by lending money to the people who are in need. Clear? But the biggest problem is that there is no protection with respect to the non-institutions, but there is a protection with respect to the institutions, because institutions always follow certain rules, certain regulations, certain guidelines. Unfortunately, those are completely missing in non-institutions. Is that okay? Now when it comes to this agricultural finance, so when it comes to agriculture credit, a working group has been constituted by RBI to review agricultural credit, released its report on September 13th 2019. Right? So this is one latest information we have. Of course this happened 5 years back, but this is valid even today. And what exactly the reason why this working group has been constituted? This working group has been constituted to look into the issues that are related to the agricultural credit, meaning this is related only to the credit, that too with respect to agriculture. And the report has been submitted in the year 2019. And when this committee was constituted, any committee, whenever it is constituted, certain guidelines will be given. So we are constituting a committee. The members of the committee must look into and examine certain points. In the similar manner, this working group was also asked to look into certain aspects. It was asked to examine what? Reach of the institutional credit. Institution means banks. So how far these banks are able to provide agriculture loans? Clear? Whether all the people who are in the agriculture field, are they able to get the loans from the institutions, from the banks? Clear? That is number one. Number two, ease of credit and inclusiveness. If they are getting the credit, how easily they are getting the credit? Are the procedures are stringent and cumbersome? Are the procedures are very this easy? Right? So you have to examine, the working group has to examine. And inclusiveness, whether the loans are being provided only to the selected sections of the people, or the loans are being given to every section in the agriculture field. These are the two important points. And the third one is that impact of loan waivers on state finances and credit discipline. Now what is happening? Let's look at any state today. Most of the states, especially before the elections, the political parties are promising that once we come to the power, we will waive all the loans. Right? First point, all the people are not getting the loans. Getting loans is not easy. Third point, the states, the political parties are interfering. They are promising the people that once we come to the power, we will waive all the loans that have been taken by the farmers. Clear? So this is another serious issue. So if the loans are waived, meaning the farmers who took the loan need not pay it back. But who will pay it back? That is the point. If they are not paying back, if those loans are waived, then what is the situation of the state finances? So what is happening to the finances to the state? So these are the points. And on these points, the RBI constituted a committee, and that committee is called a working group, and that working group was asked to look into all these aspects. Clear? Got it? Very important one. My dear close friends, since you are preparing for the competitive examination, you need to understand these aspects in detail and in depth. Clear? Over? So this is the first slide on the screen. Next one, what are the key observations and recommendations of the working group includes? Clear? So obviously you need to observe, when a working group has been constituted, that working group has to examine, that working group has to observe. After that, you have to submit the recommendations to the authority which has constituted the committee. So in this case, what happens? The working group has been constituted by RBI. The working group has examined, observed and submitted a report back to the RBI. What are the observations? What are the recommendations? Let's try to understand. By understanding the observations of this working group, we can understand all the issues that are there in the agricultural credit. Clear? And after that, what it has recommended, let's try to understand the whole scenario very, very clearly. Look at this. So number one, increase in the share of short term crop loans. Clear? So you have the loans, short term loans, mid term loans and long term loans. Clear? And it says that increase in share of short term crop loans. Look at this. The working group observed that the interest subvention scheme for short term crop loans has increased the share of such loans in agriculture credit from 51% in 2000 to 75% in the year 2018. Meaning it has observed that there is an increase in the the share of the short term loans. Clear? Point number one. The scheme has incentivized short term production credit over long term investment credit, which is important for long term sustainability of the sector. Very, 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 very important one. If you provide short term loans, you have to pay it back in a short period. That will become really a problem for the agriculture sector. That is the reason why if you provide the loans in long term, if you provide the long term loans, it will give strength to the agriculture sector so they can plan properly, because it is a long term loan. Otherwise, every minute they have a burden, right? Especially at the psychological level, right? So because they need to pay it back immediately. Clear? This is one. Next, the working group noted that central and state governments need to increase their capital expenditure. You know the meaning of the capital expenditure? We have already discussed, right? Meaning this committee recommended that you have to, both central and state governments must increase their capital expenditure. Why? So that it will stimulate the demand for investment credit in agriculture. So that is the reason why it is not just the agriculture people, but the government must also play a proactive role. And this particular working group has suggested that both the governments must increase their capital expenditure, right? It also recommended that banks should provide crop loans under the scheme only through Kisan credit cards. Why? In order to curb the misuse of interest subsidy. Basically, what will happen? The people who are being given the loans under Kisan credit cards, right? So obviously, there is a subsidy with respect to the interest. Meaning, if they pay back the principal amount, that would be enough. But what happens here? Apart from this, if you are providing loan through any other route, there is every possibility of the diversion of the funds to some other area. Meaning, when the funds are being provided, credit is given for the agriculture, you have to provide that money has to be invested only in the agriculture. And that is possible through the Kisan credit cards. Am I clear? Very, very, very important. This is the one observation that is made by the working group that has been constituted by RBI, and that working group submitted its report to RBI in the year 2019, and we are discussing those issues and initiatives. Clear? Next, the second one, the loan waivers. So this working group also looked very seriously into the loan waivers. And finally, the committee said very clearly, the working group said very clearly that the governments must avoid wave loans. Very, 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 very important one. Is that okay? So, so what happens, that is running into thousands of crores. And all of a sudden, a political party that comes to the power and says that we have promised during the elections, before the elections, right, during our campaign, we said, so that has been included in our manifesto, that the loan waivers will be, there will be, the all loans will be waived. Then obviously what will happen, that may be a big relief to the farmers, but how much burden that is causing to the state, and the state finances will be, right, and will be shaken, and finally, the state will be running into, bankruptcy. So you can look at your own state, what is happening in your state. This is happening in every state, even today also. That is the reason why it has been advised that governments must avoid, this loan waves. Clear? Look at this. A working group observed that since 2014-15, 10 states have announced loan waivers worth of 2.4 lakh crores, right? And this is happening mostly near the elections. Huge money has been, waived off. Clear? It noted that loan waivers do not address the underlying causes of a farm distress, and it will destroy the credit culture, potentially harming the farmer's interest in the medium to long term. Very, very important one. Whatever is the distress that is there in the agriculture, that cannot be addressed through the loan waivers. In order to address those distress issues, the government has to follow something else, but loan waivers is not the solution, and that will push the state into financial troubles. Am I clear? That is the reason why, that is of course not one reason, that is one of the reasons why most of the states are struggling. Is that clear? Right? Now, it also noted that loan waivers squeeze the fiscal space available for productive investment in agriculture. So obviously what is happening, when the money is given in the form of the credit, that money itself is not coming back. So there is a delay. The governments will promise that the government will be paying it, but the financial discipline will be lost through the loan waivers. The working group recommended that loan waivers should be avoided. Very, 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 very important one. So it has been recommended for quite long. It has been reiterated by the working group in the year 2019. But even this trend is continuing even today also in most of the states, unfortunately. Clear? The central and state governments should undertake a holistic review of agricultural policies and input subsidies in order to improve the overall viability and sustainability of the agriculture. Very, very, very important one. So you provide input subsidies, you change your agriculture policies, you strengthen the agriculture sector, but loan waivers is not the solution. This has been recommended by the working group. Clear? Next, look at this. Credit for allied activities. So when we are saying agriculture, most of the times, rather, it is considered as agriculture means only crops. That is the reason why, so we are saying agriculture and allied, activities. What do you mean by this? The working group observed that allied activities, what are these allied activities of agriculture? That is nothing but livestock, right? Forestry and fisheries. All these put together are called allied activities of the agriculture. Clear? And when it comes to these allied activities, they receive only 10% of the total agriculture credit, but they contribute 40% of the agricultural output. Very important. Meaning providing loans to the allied activities is that is not, that there is no clear route. But when it comes to agriculture, for overall agriculture we are providing. And if you are specifically mentioning about the agricultural allied activities, like, as told you, livestock, forestry and fisheries, they are receiving just 10% of the credit, but their contribution is 40%. So when the contribution is 40%, they should also receive the credit of 40%, but they are receiving only 10%. There is a gap of 30%. Am I clear? Next, it noted that this could be due to the lack of a proper definition for farmers doing such activities, as the census defines a farmer based on his land holding. So who is a farmer? Farmer may be a small farmer, marginal farmer, or a large farmer. Clear? How do you define? Based on their land holdings they are being defined. Clear? And census has not covered the allied activities over there. That is a big problem. Am I clear? So the definition of the farmer has to be changed. As a result, banks insist on land records for providing credit to such farmers. So right, so you are providing loan based on the the land, but not on the activities. That is the reason why allied activities are not receiving the required credit. Am I clear? Next, banks do not have any specific mandate, such as priority sector lending, to lend towards the allied activities. Meaning RBI has not given any instructions, government has not given any proper guidelines for giving priority lending to the allied activities. That is not there. Next, the working group recommended that separate lending targets should be set for allied activities, and banks should not insist on land records for up to 2 lakh rupees of such credit. Very important one. If any farmer is requesting loan for the purpose of the agricultural allied activities, don't insist on land records. Maximum of 2 lakh rupees as the credit should be given for allied activities of the agriculture. So this is a recommendation that is given by the working group. Clear? Next, we will go ahead and discuss more points now. We have a question. Consider the following statements. Look at this. 2 statements are given and we need to choose the correct, the statement or statements. The agriculture and allied activities like livestock, forestry and fisheries receive only 10% of the total agricultural credit. Just now we have understood. Very much correct. The allied activities contribute to 40% of the agricultural output. This is also correct. Just now we have discussed. So obviously our answer should be option 3, because both the statements are very much correct. Clear? Kindly remember this along with the percentage. Possible question in the examination. And you should also be very clear that what is agriculture, what is agricultural allied activities, clear, and how a farmer can be identified, right? And what is the definition of the farmer, by that is given by the census. That is important. Am I clear? Very important one. And your answer is option 3, meaning both the statements are very much correct, right? So this is the answer. Now, so when it comes to the sources of credit, so what is the sources of credit? Let's see. The working group observed that in 2016 and 17, 72% of the credit requirement of agricultural households was met through institutional sources. Very important one. In the beginning, large percentage was coming through non-institutional sources. But by the year 2016-17, 72% of the agricultural required loans are coming through the institutions, and 28% is coming from non-institutional sources such as relatives and money lenders. Very important one. Right? Hope you are getting this very clearly. Right? So 72% from institutions, 28% from non-institution, and this is the information of the 2016 and 17 as given by working group in the year 2019. Right? It noted that reliance on non-institutional sources could be due to why the people are relying on non-institutions today. Right? So this is not the new one. Since beginning, majority of the farmers depended on non-institutions. Right? So why? The reason is that lack of collateral security with the landless laborers, tenant farmers and sharecroppers. So basically what will happen, land may be somebody's, so that landowner may go to the bank and he can get the loan. That's a different thing. But the land may be given for rent, meaning there are tenants who are cultivating the crops. There may be some sharecroppers. So land belongs to someone, the actual agricultural activity belongs to somebody else. For somebody else, how the loan will be given? So right, so those loans are not given by the institutions. That is the reason why even today they are depending on non-institutions. Number two is the poor credit rating, and third one is the involvement in unviable subsistence agriculture. Subsistence agriculture means, hand to mouth. So they are cultivating, they are growing the crops for their um, um, family purpose, clear, or for a very close circle purpose. And in such cases what will happen, they will not be provided loans by the institutions. That is the reason why they are still depending on non-institutions for the credit, and that percentage is 28%. Am I clear? Next, let's go ahead. Next point is the land reforms. So when it comes to land reforms, the working group noted that in the absence of the proper land leasing framework and lack of records, landless laborers, sharecroppers, tenant farmers and oral lessees, they face difficulty in accessing institutional credit. Right? So there will be no issue with respect to the landowner if the land records are very clear. But what is happening, the loans are being provided only to the landowners, not for the sharecroppers or for the tenants. For this reason, there is a necessity of land reforms, and unfortunately those reforms are not being taking place even today. Very important. Clear? Next one. So we'll be moving ahead and we'll be going to the next slide. Look at this clearly. So when it comes to the working group, it observed that reforms such as model acts have not been adopted by many states, which could be due to a lack of consensus on concerns raised by states during the consultations. This is one big problem, that India is facing even today. Central government will give certain directions, but the states are not accepting because each state demands are different, each state requirements are different. That is the reason why it is becoming very difficult to reach to the consensus through consultations. That is one major reason why it is getting delayed. Clear? The working group recommended that for building a consensus, the central government should set up a federal institution on the lines of the GST Council to suggest and implement the reforms in agriculture. This is a fantastic recommendation given by the this working group. Just like you have GST Council with respect to GST, Why don't you have a federal body which includes both the central and state governments, and that body will be look into these issues and it will recommend certain reforms in the land issues, right? Very very important one, and that should be implemented with respect to the agriculture, right? And when it comes to the credit for the marginal, small and marginal farmers, working group observed that small and marginal farmers hold 86% of the operational land holdings and have 47% share of the total operated area. So this is the information. However, only 41% of such farmers could be covered by the banks. So this is the problem here, right? So the percentage of the small and marginal farmers is very huge, but the percentage of credit that is being given to them is very very small. Is that clear? So that is the reason why there is a necessity of reforms with respect to the credit in agriculture. Similarly, you have the disparities. So this is a big problem here, because every state has got different types of soil, different types of the atmosphere and environment, and the needs are different. That is the reason why all states are not getting equal credit. So the credit is varying from state to state. So when the credit is varying from state to state, definitely the agriculture development will also vary from state to state. That is the reason why you should have the holistic approach with respect to all the states. Providing larger credit to some states and neglecting some other states is not at all acceptable. This is what has been observed by the working group constituted by RBI, right? So, and look at this, I have given some point here as a note. Relatives and commission agents also fall under the category of the non-institutional source, right? So we have already discussed. So to come to the conclusion, right, look at this. At the time of independence, for your information, the most important source of agriculture credit was money lenders. Maybe a possible question. At the time of independence, what was the main source of agriculture credit? It was money lenders. Clear? In 1951, shocking, money lenders accounted for as much as 71.6% of rural credit. So huge. So the institutional credit was marginal at the time, right? Slowly the situations are changing now. RRBs, what do you mean by RRBs? Regional rural banks, for providing credit, they have been established in the year 1975. And with respect to concentrate on the agriculture and rural development, NABARD was established in the year 1982. These points we already know. Clear? So this is regarding the agriculture credit, and what are the issues and initiatives that are associated with this. Fine. So that's all for the day. Thank you so much, and I will see you in the next session.